Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
That intro is not as long as I remember. Here I am still dabbing my eyes and crap. All right, guys. To the charts. Well, yesterday, Treasuries moved a little bit. I mean, we had a little bit of upside movement. And now here this morning, we're up there again. Now, for us to continue to move up, we'd have to reach those highs from earlier in the week, which I don't know about that one. I kind of suspect that we'll stay under there until the CPI. But we do have a 10-year auction today, and demand has been pretty good so far. So I could be dead wrong on that one. It's just a guess on my part. That's where the treasuries are at. S&P 500 ranging the past 2 days after a pretty decent rally. Oil on the upside this morning. Still kind of in the middle there. Gold and silver still just in their ranges there after the big downside from the last what was it? I can't even remember what led to this, but whatever. GABA continues to struggle here. Bouncing, but struggling. And then the dollar still sitting right around 102, although the Japanese yen has been falling a little bit. So. And then Bitcoin. Bitcoin. Big jump last night and then dump because the SEC tweeted that they were approving ETFs and then immediately said, no, that was wrong. That was, we were hacked. You know what I think happened? Here's my theory. I think that they're over at the SEC with Gary Gensler and they're like, okay, I guess we should make an announcement. So let's make an announcement, guys. They put the pictures together. Gary's like, okay, that looks good. Can we like schedule it to be tweeted tomorrow to make sure so that we don't have to worry about that? And the guy is there's like, sure, okay. And then they do everything. And then instead of scheduling the tweet, he just tweets it out. And that's why it was like immediately afterwards, like, oh, no, we were hacked. We were hacked, guys. I don't believe they were actually hacked. Anyways, Bitcoin took a big jump off of that and then got absolutely killed. And it's the whole thing is just hilarious to me. So much drama over it. But I'm pretty certain, about as certain as you can be about something in the markets, that they will approve it tonight. So, if anything, that decline may be a buying opportunity. Although I don't 100% know if the day of the event it's going to be a buy or not. I think the reports that I've read, they believe that after the ETFs are in place, so it'll be like $1 billion that is going to get put into the market when the ETFs go live. But then over the year, they expect 10 billion of inflows to come in. That's a lot. Yeah, that's going to move the price of Bitcoin up. So it's a buy. I'm not going to do it because I hate Bitcoin, but it looks like a buy to me. But we'll see. I've been arguing with people on Reddit have been trying to argue with me because apparently there's a group of people that still don't think it's going to happen. I understand the skepticism because I didn't think it was going to happen. And they're like, like asking for sources and everything, and give them the source, and then they don't like the source, and then I'm like, look, okay, go to the source that you like, and then go and do a search, because you're gonna find tons of threads about what they've been doing over the holidays. Okay, so it's happening, and everything I understand about the process is it's gonna happen tonight after market. So buckle up, because it'll probably be incredibly entertaining. See, people are figuring it out in Discord. The bots are not even mutual servers with you. Gotta figure out how to do a honeypot. Let's see here. Is there a way to run user bot? Discord user bot or user script. Automated user accounts. Discord's API provides a separate type of user account dedicated to automation called a bot account. Bot accounts can be created. Blah, 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 blah. Automating normal user accounts outside of the API is forbidden. Please. Please. Wait, is there any way within Discord to tell that somebody is a bot? Now I'm wondering. Na, 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 na. Yeah, it says bot next to them. Good luck, everyone. I think we can kind of screw around today and mess with something if you guys want, because I really don't think that we're going to move a whole lot. Well, actually, I should take that back. I mean, there is a 10-year auction, but with CPI tomorrow, I'm not too sure that we're going to get many very good opportunities. I mean, yesterday it moved enough, but it was still kind of a little tight. Think about that. If you have any ideas, we can totally do it. I'm gonna blow my nose here. Oh, you're right, I'm muted. What do you mean the pullback yesterday? In what instrument are we talking? Are we talking about the ES? I mean, I guess there was a pullback yesterday in the ES, kind of, but there was some weird stuff yesterday. And yes, so, yeah. Let's just put it down. Okay, so I'm searching here. Discord user bot, and the first article is we don't allow that, and then the second one that I got is here's a working library to do it. Let's see. It was an yes. Well, okay. So you must be talking about. You must be talking about this area right here, right? Where it declined big time and then it jumped all the way back up. Like this whole thing. Because that does look pretty dramatic. And look, somebody totally sold off. Probably a robot came into the market and sold it. I can't see, one of the best ways to look at this sort of thing is to look at the tick data, which says which stocks are moving up versus moving down and so forth. So if all of the stocks are moving down, that's a really good sign that a systematic strategy is selling all of the individual components. You could see that. It wouldn't surprise me to be seeing something like that happening right now. But I wouldn't read too much into it. I wouldn't say that. I wouldn't assume there's something predictive about it. Okay, what exactly is an auction day and what does that mean? Excellent question. So, on a periodic basis, the United States Treasury Department will auction off new Treasury securities. In this case today, they are going to be auctioning off 10-year notes. The way that this works, you can go to treasurydirect.gov, and this is where they kind of provide all of the information. You can even choose to participate in the auction, and you can come in and you can say, I want to buy a 10-year Treasury. And this is this is what I'm willing to pay for it or something like that. Okay. And then what happens is everybody kind of puts their bids in, right? And then they kind of do a weird auctioning process where they take all of the orders that they've got in together and they say, okay, these are all of the individual people that want to buy stuff, etc. Foreign people that want to buy stuff. And then what's left is the dealers. The dealers get the rest of it. And then they basically keep raising the interest rate until the dealers buy all of it. Okay. So when that happens, basically there is a high yield or whatever the deal is, or a low yield rather. Sorry, how does this work? Is it the low? I think it's the low of it all, right? I think it's basically they keep lowering the interest rate until they've bought it all, and then that low yield is basically the yield that everybody gets for the treasuries, right? So then you can look at what is the market pricing for the 10-year treasury at that time, and what was the low yield from the auction that everybody got, and there's a difference between that. Is basically what they call a stop through or a tail, based on whether it's higher or lower than what the market was expecting. Okay, so that's the process that it works. You can go online, you can read a little bit more about it, but the reason that that's important is this event is basically supply for treasury market. Like in the oil market on Wednesdays today at 10:30 Eastern time, they will post the oil stocks numbers where they go and they say how much oil do we have available right now. Okay. And that is the numbers on supply for the oil market. The treasury auctions is basically the information on supply for the bond market. And that's why it's important. And that's why you'll get a little move when that happens. But also before that happens, there's all these guys that are like the dealers and so forth. And they're doing all of this stuff to figure out how much they're going to have to buy and what the interest rate is going to be. And so if they decide, oh, okay, I want to buy it here, they might come in and sell a treasury or buy a treasury, vice versa, to basically lock in the interest rate. that to hedge what's going into the auction. So the result is that you do get significant order flows on auction days. Its problem is, at least for me, I don't exactly know how to predict what those flows are going to be, or like trade against them per se. But if I have a larger overall bias, those flows can provide really advantageous areas for you to get involved. So that's why auction day is kind of important. But again, because we got a CPI tomorrow, kind of like probably holds back a lot of activity. So I don't know how well today's auction will go or not. I don't think anybody's expecting the CPI tomorrow to be super bad or anything. But we'll see. We'll see. Yeah, they're probably waiting for the CPI. Market is currently in range. Of course, I'm in equity, but range. Yeah. Well, I mean, we'll just see where the treasuries go, because, you know, if we got another buy trend like we've had the last 2 days or so, it would push us up and above the weekly high. And I'm a little bit skeptical about doing that before the week is done. I mean, if somebody needs to buy it, then it's going to happen. But I would think that you would be holding off. And that if you got up to that point, that you would be like, oh, let's, you know, let it come back. Don't push it through that. You know? Okay, what was I doing? Oh yeah, I was looking to see if they can read messages. I'm reading this API. Doesn't look to me like they have a private message. Yeah, let's try searching Discord honeypot, maybe. Oh, look, here's a robot to do exactly that. Wait, what are they using? Import Discord. That means it's just a robot. And that was 7 years ago. Here's the one where somebody on the Discord GitHub says we should be able to, you should make a special kind of account specifically for this. Guy says, Judging by the dismissal this is received, I guess we prefer to fight spam on Discord with tweezers instead of empowering community efforts. And then this guy says, you fight spam by disabling DMs and reporting bot accounts to Discord. There are far better alternatives that can be done to the API itself than allow bots that are user bots but not actually. But that's exactly what we need, though. Didn't see the beginning of the live, but have you seen the, well, yeah. Which instrument has the highest tick value? I think it's UB. There might be something that's a larger tick size that's like really esoteric and nobody trades, but I think for retail traders that your best bet is UB. Or Z. I mean, ZB and UB have the same tick size, but UB moves a lot more. Anyways, so if you missed it at the beginning of the stream, I talked about what happened with the Bitcoin ETF. What I think that that tweet was legit. I don't think that they were hacked. Obviously, can't prove it. Maybe we'll find out. But I think that was a legit tweet that was X post, whatever, that was sent out early, and that they're lying about being hacked. Yeah, I don't know if there is any obscure instrument that has a larger tick size than ZB. The spam bot author could decide to just not DM inactive users, so your solution of creating inactive users that can only receive DMs is quite useless. I don't think that that's what they do right now, but they could do that. So then you would have to have the robot talk every once in a while. Sure. Reading this thread is really infuriating, because they're like, okay, if you come across behavior which breaks our TOS, report it to us. I've been reporting it to you for like 4 years and you haven't done shit. Man, there's gotta be a better solution. But maybe the solution is to just leave Discord. Palladium has a $50 tick value, really? That's interesting. Well, I'll tell you another. It's not as big as ZB, but there is a set of thick tick instruments that you might not be aware of, and that is pretty much all of the short-term interest rate instruments like treasury bills, etc., tend to be a tick is 1 basis point and is worth $25. So silver is 25. Yeah, there's definitely a lot of them that are. I mean, let me put it this way: ES is one of the smaller tick sizes. Yeah. You know, one of the things that drives me crazy with this whole Discord issue, though, is with as many robots as are out there sending people these messages like that, well, it's crazy to me how many people do not change their privacy so that they don't receive them. You know? Why thinner instruments don't have lower tick value and thicker instruments higher tick values, and why doesn't it change as thickness changes? So they can set the properties to be anything that they want, right? They could have made the micro 10-year treasuries go out to 10 thousandths, right? They could have added another decimal point to the end of it, and then the micro 10-year would move 10 times as much. And then you could say that one is worth $1. And then, you know, you would make 10 times as much money trading it, wouldn't you? Right? But they set those things based on the needs of the market that they're going to serve. So for instance, if I'm doing hogs are priced in cents, and that's because that's the way that like the farmer kind of determines what his profit is going to be. So he says it costs me X cents a hog to make a hog, right? And then so they go over there and they price them in cents, and then they say, okay, like how big do we need to make the contract for it to actually be a hedge for them, right? So typical guy, you know, 5,000, you know, typical guy, they're going to be tens of thousands of hogs, and so we can split them out by 5,000 hogs or something like that. And then 5,000 hogs, you know, would cost this much. This is like the amount that it could potentially change, and so this is how much the future has to change in dollar amounts, and then they calculate that out and kind of figure out what would be the best tick size for that instrument, and they figure things out like that. So the reason that the 30-year bond is 31.25 a tick is because that's 1,000 divided by 32. But that's also why, you know, like trying to select which instrument you're going to trade based on the tick size does not really help you at all. You need to have an edge in that market. You know, if you don't know anything about raising pigs, then it probably doesn't make any sense for you to trade hogs. Unless you have some resource like your neighbor is a pig farmer and you can learn from him or something like that. A political rant, sure. You can try. You can try. What's your take on independence? I don't I don't know what that means. I don't know what you're getting at there. There's a lot of independence, and polling actually kind of suggests that people that identify as independents aren't actually independents, that they tend to lean left or tend to lean right. They also tend to be lower information, less engaged voters. People that are less likely to vote and less likely to know what's actually going on. Right now, they seem to be leaning towards that they really, really hate Biden. Some big laws on the hog industry changes this year. Oh, I'd be interested to hear about that. I don't know why I'm just like all of a sudden on this train of thought. That's the ADHD mind for you. But now I'm obsessed with this. Like I've become hyper focused on how do I deal with the freaking Discord spam. And now I'm thinking I create a second server in a different service. Obviously, don't shut down the existing Discord server, but I start a new one. A service that is better at spam. See, like, here's one. New members joining and reply slamming people. More bots. Well, so what we were getting at, so I have the issue used to be that they would come in and join the server and make themselves look like a server admin and then start messaging people, and in the hopes that people would realize that would not realize that it's not the same person, right? So they did a couple of things. One of the things that they did is they allowed you to permanently claim a name. So now, unless their username is exactly Speculator Seth, you know that it's not me. But people still get messages and don't seem to be able to differentiate them. So then what we did was I created a robot that scans everybody's names. And whenever somebody tries to impersonate me, it bans them. And this has been incredibly effective. It catches every user like this. So what they did now do instead is they just join, grab the user list, and then leave the server and start messaging people directly before they can get banned, essentially, right? So there's nothing that I can do to stop them from messaging people on their own. Discord has to do something about that, right? And the thing is that they've been doing this for years and years, and Discord has as of yet been unable to find a good way to prevent this sort of stuff. I think that they've kind of taken the position of like, well, spam is going to happen. There's nothing we can do about it. But I say BS. Like, one way that you can do this is you can create honeypots. So you create users that look like normal users, and then if you message that user, you get banned, right? But I've been reading through the discussion about this, and Discord has basically said, nah, we're not going to do that. And we're not going to allow you to do that. So what am I to do? Their solution is just message Discord about it. It will raise prices on pork due to the forced legal cut of amount of hogs raised. Could be good, could be bad. Could raise quality of life for pigs greatly. I don't know. I feel like they get less money without all the crazy spam crap. Why would they just allow this kind of thing to go completely unchecked? Yeah, well, I does seem to me like Discord is at risk of being replaced. Like, even during the internet relay chat days, I don't remember seeing spam this bad. It may well be that having a huge global application like Discord is a disadvantage in that respect. Because in the IRC days, it was like, oh, okay, if we're getting tons of spammers from India, let's just ban all India IP addresses and, be done with it. Or just ban this entire service provider. And then if people start complaining about it, then you say, well, your service provider has somebody spamming on it. Tell your service provider to deal with it, and then we'll unban them. What would replace Discord? That's a good question. Let's see here. I mean, Telegram is probably the biggest one that I know of. Surely there's ones in like the last month. Threads about this. I suppose I could use something like Slack. Slack might give me more flexibility. Revolt. WeChat. 15 Discord alternatives for those who take security seriously. So these guys apparently don't like Discord because they think that it's insecure. Discord is not encrypted. Yeah, that's what they are complaining about. If you want software more under your control and hosted on your own server, you can use Element Mumble. Mumble has like Discord-like features now? Whoa. Okay, so this one, I should try this. I should try Matrix. Because I can run it on my own server. And I have one. I have one. So like oh, Slack. Element, former Riot, good but without voice channels. There are a lot of alternatives. So a lot of these are like for voice chat. Well, the auction doesn't happen until like 11, dude. Or let's see here. 11 o'clock my time. So like 1 o'clock Eastern time. Also, we got Feds Williams after that, which is highly anticipated. But yeah, it's you see this is like not moving at all. Hey, is Seth pretty good at this? Yeah, I'm kind of proud of myself that I'm coming and I'm like, you know what? I don't think it's going to move very much today. And then I completely ignore it, come back and look at it, and yep, it's only moved like 4 ticks in the past 45 minutes. That's terrible. That's terrible action. Like when it does that, just walk away. Let's do, there's some other things that we can do, right? Oh, Matrix is the server and the app is called Elements. Let's see if they've got our Reddit. What's the sentiment around here? The sentiment around here is that it's not going to do anything today. We've got highly anticipated CPI news tomorrow. We're just below resistance. got a 10-year auction today. I'm not actually seeing a whole lot of activity, even though there's an auction today. So when I see that at the very beginning, that's a really clear sign to just, not touch it today, that there's not enough activity to try and trade it. You can self-host a Revolt server, can you? What about equities? It's a good question. Well, I think that the bias in equities is probably still slightly up, but with scary pullbacks. I mean, the one we've had downside action late this year in equities, it's been kind of scary, huh? Revolt has been around since 2020. Matrix Federated Chat Network. So let's compare. Matrix has 3.4 thousand users on Reddit. Revolt has 1.3. Your research team thinks if we do anything, it's probably sell, but not by much. Oh, we got 10 minutes to the open. Honestly, if there's anything to play with, I'm looking at Bitcoin at 45,000 after the big mess yesterday. I am pretty confident that they will announce the ETF tonight and that there will be a jump afterwards. I don't know. It could be like there will be a jump and then it sells off and we end up lower. So there's like super big risk with it. But I think that, yeah, you could buy Bitcoin here at 45,000 and try and sell it at like 55,000 or something like that. That's the only thing I really see in the market that looks really interesting to me. Reject Discord, return to internet relay chat. There you go. Friend of mine is short. And I asked him yesterday if he closed his position, and he said he just made his entry point higher by shorting it. Really, there was somebody in the Buttcoin subreddit that said that they decided to go short, and that they got stopped out by it. Like when it happened, it moved up and they got stopped out, even though they think that they're right. But this is a person that doesn't think that the ETF is going to happen. So I was going through this with some people the other day, and I was quite flabbergasted to be, because listen, like 2 months ago, I was like, I really don't think the SEC will do it. Like, I understand there was that court case and everything, but they can just ignore that. But they wouldn't be doing all this work. We've gotten all of these news stories from multiple places, basically talking about them going back and forth, amending things, doing all of this stuff, that there's like a war over what the fee will be. They're all trying to undercut each other. That wouldn't be happening if the SEC wasn't going to approve it. The SEC would not have everybody working over the holiday unless they were going to approve it. So I am as confident as you can possibly be that we will get an ETF, and based on all of the rules and everything, it's going to happen tonight. And but there's a bunch of people arguing it, and I'm like, okay, well, you just wait a day, you'll find out. Then we'll see what happens. It's going to be interesting. The day of is going to be interesting. I suspect with the way that this has all been going, that there will be like a really huge rally followed by a really huge sell-off. But in the long run, I think it is positive news for Bitcoin. $10 billion into Bitcoin is a lot in quite an illiquid market. Okay, so here's a story from Y Combinator. Why I chose Revolt over Matrix. Oh, come on, Y Combinator. Don't be like this. It's not loading. Okay. Revolt is maintained by students, by 18-year-old students. That does definitely make me question the longevity of the projects. Wow, people are openly talking about alternatives on the Discord app subreddit, so maybe I can make a thread about that. Listen to his logic. He has 10 Bitcoin, is short 8, would get liquidated if price goes to 250, and argues he would lose those 8 Bitcoin, but he would actually have more money since 250 times 2 equals 500K. Well, you would have more money than you would. It's a hedge, essentially, right? It's a hedge. Yes, you'll have more money than you do today, but you won't have as much money if you didn't have the short on. Okay, having issues with my internet. It slows down to a halt and breaks everything. I called my provider. They said everything is okay. Rebooted everything. Okay, so I like the first thing that I'm doing when I'm having network issues is like pinging my router. So like if I send a message if I open up the command prompt and I type ping 192.168.1.1, what do I get? Can I verify that the connection between me and my router is good? And if it is good, then that almost certainly means that there is a problem with the service provider and they're being shitheads, you know. So what I would do is I would go and research a bit about that sort of stuff and learn some of those things. And if you know a little bit more, then when you call them, you know, they'll be like, oh, this guy actually does know what he's talking about, and they'd be more willing to help you. Okay, why Revolt instead of Matrix? Yeah, the free router from the internet company usually sucks. That's absolutely true. And this person is saying Zulip. Yeah, so your router is almost always 192.168.1.1. Well, they don't even have a subreddit, so ignore that guy. Okay. So just read a few things about Matrix that makes it sound like that it is insufficient. Okay, so after you ping it, what should happen is it should say received reply from, then it will tell you how much time, right? So you should be getting replies back from your server, and it should be like less, or from your router, and it should be replies should be less than 10 milliseconds. Here, I'll do it over here. So I open up terminal. I have a PowerShell window and just use CMD, but then I do ping 192.168.1.1, and it will come. It will ping it 4 times, and each time it was less than 1 millisecond. Right? That tells me that everything on my network is okay. So if I'm having an internet connection problem, like website is being slow or whatever, that proves that it's not me. That proves that it's the internet connection. Right? Generally speaking, it proves that. Your ping time is 6 milliseconds, so that's curious. But is it always 6 every time? I think anything below 10 would probably be normal, but it should be like the same every time. If it's not, then you might have a network problem. You know, that could just be down to you have older networking equipment or something like that. That it's 6 instead of 1. Your request. Well, so you might be, if you're not getting anything from 192.168.1.1, then you must have a weird setup. Why I shouldn't have closed the thing. So if I go to terminal, I think I do IP config. Yeah. And here Ethernet adapter Ethernet, and it says default gateway. Right? It will almost always be 192.168.1.1, but you might have a weird setup. So then your default gateway will be something different, and you would want to ping that different IP. When 11, 9, 15, and then 3. That's a little suspect. So based on that alone, I would say you might want to look at the cable that you've got. I don't know. It's maybe that's not a huge deal, but you might want to look at the cable. Make sure that the cable's not like crossing over a huge power cable or something like that. Anything that will create interference and noise. Two 254. Well, that's not right either. That seems weird too. Revolt, free and open source alternative to Discord, has hit 100,000 registered users. Oh, so you're 192.168.254.254. Oh, well, ping that. Three, two, two, three. Well, okay. I have really good Ethernet cables and networking equipment, and I get 1 milliseconds every time. And just know that you're like, if yours says 15, that means that at that time, if you were sending a trade, that's another 15 milliseconds that, you know, your messages would be delayed. Wonder what's wrong with Y Combinator. Any idea why your upload speed is so slow? Well, generally speaking, your upload speed is always going to be less than your download speed, unless you're paying for really nice, you know, like I have about the best internet you can possibly get because I have a dedicated fiber optic line that gives me 10G up and down. But, you know, like your typical DSL or cable provider, you know, they'll usually give you like a ton down. They'll give you like 5 gigs down, but only like half a gig up. So it's not necessarily unusual for your upload speed to be a lot less than your download speed. Treasuries broke out the bottom of the range there. Decent. It was 27.90 amount of liquidity there to do it. So I wouldn't say that their breakout is necessarily significant, but let's see if they continue through. And there are about 6,000 contracts at 0.5. We'll see what they do when they get to there. I'm going to try creating a well, they went right for it. They did touch the 0.5. Tell you what, that decline there actually looks quite significant now. S&P 500 is taken off here too, by the way. Seeing the Japanese yen plummeting along with them and the dollar spiking there. Maybe there's a honeypot for better Discord. I unmuted the stream and heard you talking about cable, and I was like, when did Seth start trading Forex? That's funny. Yeah, I think it's so weird that they call the British pound cable. It is. Oh, that's right. They call it cable after the underwater cable connecting New York and London. That's correct. I still think it's weird. Well, they haven't pushed below 0.5. I don't know. So this is a losing game. What I'm about to tell you, this is a losing game, but the most likely thing to happen here is for them to float back up to 0.4. I need some help. It's so boring. Help me trigger Seth on a crazy rant. Well, I'm going on a rant here on Reddit. I'm still typing the thing. What's the best correlation for an inverse correlation with ES? Oh my gosh. Yeah, I wish that there was one. Listen, the best instrument for an inverse correlation on an instrument is going short that instrument, right? The correlations between ES and the bonds, they change all of the time. And this is the whole thing with like all portfolios, essentially, right? Is that ES gives you the best returns, but there isn't really a super great way to hedge against them. Like your best bet is to go long bonds, essentially. And that's what the risk parity portfolio is essentially about. But the risk parity portfolio got absolutely decimated in 2022 because both bonds and the equities were down at the same time. So the financial world doesn't really have a good answer to this. Yeah, if anything, ES and ZD have been following each other for the last year or so, yeah. This is true. By the way, nice to see you again, Greg. It's been a while. So yeah, there's not really a true alternative. And probably there never will be. Like, the whole thing is like, when the money supply is contracting, right, that affects all financial assets. And I don't think that there is really a way to hedge yourself against that. I mean, that is part of why people want Bitcoin, but then because Bitcoin, you have to use money to buy Bitcoin, it just ends up having the same problem too. There's no way out. And I think the real answer here is that the money supply has to change based on the current conditions, and sometimes that sucks and it's just unavoidable. You know? Best way to hedge your portfolio is no, I don't know what that means. Are you saying to do voodoo? Because I don't support witchcraft on this channel. Is it enough? It may not be. I tell you what, there's something that's really been driving me crazy lately. So, for instance, I saw this on Reddit yesterday. Donald Trump would really like to see a recession before the election. He has said things to this effect, basically, but he is unlikely to get it. Well, currently, right now, very few people are expecting a recession. But like, that's the whole thing, is that when recessions happen, most people don't see them coming, right? It's always like so obvious in retrospect, but as it's happening, everybody's in denial about it. The whole system is basically set up to prop things up and to try and give people confidence, and push against that there will be a recession. But when they constrict the money supply a certain amount, and then they have to start reversing that, and they start reducing interest rates, we tend to go into a recession. It's like, even though, like, we tend to be reducing interest rates before we go into a recession, which is to say that, yes, reducing interest rates should help avoid a recession, but like at that point, it's already too late. And self-reinforcing factors kind of all conspire to push the economy over the edge anyways. So if we're already to that point where we're reducing interest rates, it's really, really foolish, I think, to come in and act so confident that there's no way that there's going to be a recession, because the reality here at the moment, I think, is that we have constricted the money supply so much and so quickly that something is liable to break. Hey, look, they got through that 0.5. They when they busted through it, it really went. Now, the thing is, on the upside, we were kind of, capped, but not on the downside. This could go all the way down. Like, the overnight low is 27, so they got plenty of room for them to continue on the downside. I don't know if you've necessarily got the volume. The way that this played out, that doesn't necessarily have to be some big boy that's going to keep pushing. That could just be like stop runs and stuff. So, and it does look like it was also the dollar that was kind of pushing it over more than anything. Dollar did have a little bit of a rise there, and the Japanese yen took another dive. SCHD is Schwab dividend. Well, I don't know if that would even necessarily be a perfect hedge, but okay. Oh, I must contain a port flare. I want a discussion, apply, post. Probably will need a moderator to put it. What do you mean, Raymond? What is the best instrument to use to trade the 10-year in micros? The 10-year micro is 10YF24 right now. I don't think you mean instrument. Man, I opened up a lot of tabs during this session doing all of this investigation about Discord. Ultras. Okay, so when we're talking about micros are the micro treasury yield futures, which means that it's a cash settled instrument that is priced in terms of the interest rate, and you make money when it moves basically a tenth of a basis point. Or a thousandth of a percent. That's what you see down at the bottom of the screen. Now, that's the opposite from the regular treasury instruments, which are not cash settled. You are actually delivering the note or bond and are priced based on the price of the bond. So when it says 112 even, that's basically saying you would be buying a 10-year treasury for $112,000. Okay. Now, because you are delivering an actual treasury, they create new treasuries every month, right? There is a new auction. There's an auction today. There's new auctions every month. So which treasuries can you actually deliver? And so what they do is they have a list, and they say these are the list of QSIPs. QSIP is like an ID identifying that specific bond and all the attributes about it. There's these specific QSIPs that you can deliver, that are available for delivery. And the thing basically is that in order to allow there to be enough like bonds out or notes out there to actually deliver, it has to be a pretty wide range. So if we looked at the QSIPs that are actually like full on, they have 10 years left until they would mature, 10 years from now before they would mature, there's not enough of them for the liquidity that they need in the 10-year treasury. And so what they do is they make, they kind of blur the rules a little bit so that there's a wider array of notes available. So in this case, they allow bonds that are maturities as low as 7 years. And the problem is that the future tends to follow the bond that's cheapest to deliver, which happens to be the one with the shortest duration right now. So basically the 7 year. So the ZN is actually following the interest rate of a 7-year treasury more than it is an actual 10-year, right? Which kind of sucks, because if you actually hold a 10-year, like let's say you hold a 10-year corporate bond and you want to hedge yourself against changes in interest rates, which means that you would want to come in and sell the 10-year treasury, but you wouldn't be perfectly hedged because there's a difference between the bond that you hold that's 10 years and the cheapest to deliver, which is a 7-year, right? So what do they do about that? They created a new instrument called the Ultras. The Ultra is like actually a 10-year. The Ultra 30-year is actually a 30-year, whereas ZB is really more like a 20-year bond, right? And that's what the Ultras are about. So you could totally trade TN. Nothing wrong with that at all. There's just not as much liquidity in those as there are the main ones, and that's why, you know, we focus on ZN. Like, the main reason we focus on ZN is because that's where there's the most order flow, and ergo, the most informational content to be able to pull out of that, at least. By the way, didn't I say that, like, the most likely thing is we come back up to that view up, but that is not what happened. We broke out, so... That's why you don't trade when it's like this. You don't trade because it's a crapshoot. It really is. We'll see if they continue going further. You know, 112 even is probably going to be a little difficult to get through. Yep, UB and TN are the two ultras. So that's what that's all about. Basically, it comes down to that the treasury futures are an actual deliverable future. If you are holding long or short a treasury future after first call, which is basically like in the month. So right now we're trading March. So, you know, when March came around, if you were still holding one, then you could be called for delivery, and then you would have to buy or sell one of these treasuries. Right? Versus a cash settled, which is we just wait until the end of the day or whatever the deal is, and then you gain or lose money based on where you bought it and what the closing price of the index was, right? So the micro treasury yield futures are cash settled based on an index that they have. You can go and read about it, but there's an index that they have that says this is what the interest rate on the 10-year is right now, right? As long as the broker allows for delivery, yeah. The broker will probably just close you out. Most brokers will just close you out before you'd ever be called for delivery. Unless you specifically had an account set up to be doing that sort of thing. Like you're trading the basis or something like that. Anyways, I digress. So with it being cash settled, because one of the issues that you have over here is like, I want to trade the yield curve, but then like, you know, how many contracts do I take? Because it doesn't, you know, the number of contracts that it takes they don't completely give you exactly full exposure to the change in the yield curve that you would want. So when you have these cash settled micro treasury futures, now you don't have to worry about that because it's just one contract. I can just do one contract here and one contract here, and now I am long or short the 2 and 10-year spread, right? And then there are strategies that you can do that are based on the yield curve that would be advantageous on that I haven't figured out yet, but apparently exist. Okay, so while we're at it, I want to just come in here and check, see if it allowed me to post my message. Well, I'm not getting anything, so it's probably still in the moderator queue. Whopping 38% of companies say they're likely to have layoffs in 2024 for several reasons. That is a concerning number. May just try installing Revolt today to try it anyways, but runs on MongoDB. That's interesting. Oh, that's right. I have a meeting today. My boss is going to be so proud of me. I remembered. I'm gonna stay on here for the last 30 minutes. I probably won't. Not that I've been speaking a whole lot today, anyways. But yeah. So put that on there. You shouldn't have to hear it. So if you hear anything weird, let me know. Might have to mess around with some audio settings. What do you mean, don't you want to change your playlists? It's a new year. Are you talking about on my YouTube page? No, I think I had that pre-optimized. I've got a lot of meetings today. Oi. Oi. Or are you talking about the audio playlist? Yeah, well, when Stream Beats releases new stuff, then I'll do a different one. Actually, they probably have released new stuff, and I just haven't, noticed. But I like this hype one. Oh, the Stream Beats YouTube page isn't. Oh, they've changed it all. I see. I don't think that they've updated it in like 2 years, so I'm sure they've got new stuff coming at some point. Maybe let's look at it in over here. Oh, they have released stuff in 2023. It's just been different. Well, I think when they release one, I think it's multiple genres. Ambient, hip hop, hi-fi, house, drum and bass, EDM, synth, chill, lo-fi, indie pop. I mean, I always put my own tracks in there at some point, I guess. By the way, I need to restart the audio engine here. At some point, I need to buy a new audio interface because basically this Focusrite gets this issue where it gets a little bit off and then you get these little pops. Hey, that was some significant volume there at 31. Wow. Okay, so now we are to the point where, well, okay, so first of all, something like that can be a stumbling block towards continuing the trend, but that also very much puts us into okay, like somebody really big is selling here today. It's so far it's only been worth like 15 ticks, but it did do stuff. Hello. This is another. I tell you what, the number of stories that I see on Reddit that are basically like, no, the economy is super great. Everybody should be really happy about it. And the only reason they're not is because of the media. It's like, there's so many. It's such a cope. It's such a cope. Guys, you can't make literally living. You can't make literally your house unaffordable, unreachable to the vast majority of the population and then turn around and be like, isn't the economy great? Are you kidding me? Come on. Come on. That's the one. All of this. Well, the question needs to be, what exactly did Biden do to cause inflation? That's an easy one. Oh. Yeah, I'm going to be muting myself here on the stream because I'm speaking. In fact, I'll probably just turn the camera off too. So I'm speaking to my team. I have doing a meeting. Looks like they're going to keep going. Okay, so my meeting is done here, but it's almost time for us to get going. I want to read a story here. Nomura. The Fed has outsourced decision making to a politically motivated Yellen who will run the economy / markets hot this year. That's the warning / possible scenario from Nomura MD Charlie McGilligot, as he notes many clients I speak to believe that both stocks and bonds have overextended, are too much too fast into the start of 2024 with widespread expectations of a heavy pullback soon. Stocks and bonds have indeed soared over the past few months, driven by the triple whammy dovish shift of a Fed policy path towards preemptive soft landing cuts through 2024, alongside the Yellen Treasury shock quarterly refunding issuance twist announcement last October, which single-handedly turned the tide for duration and generated the everything rally and markets ever since, both which look to be politically motivated into an election year. And that has now picked up further dovish arrow in the quiver in the form of an earlier than expected QT exit strategy from the Fed. Now messaging a sequencing path to taper the taper as reverse repo drains and liquidity conditions approach the lowest comfortable level of reserves in coming months. But consensus expectations into the end of January / start of February are currently for a resumption of coupon issuance increases, which could then again send U.S. Treasuries lower / long end yields bleeding higher, retightening financial conditions, and collectively then act as a headwind for now high valuation equities, as said catalyst for a pullback. However, McGilligot highlights that it now seems clear that many macro PMs hadn't considered the got you what if right tail optionality, where Fed has effectively outsourced the decision making on the future path of their balance sheet unwind to politically motivated Yellen, which on behalf of the Biden administration is looking to run the economy / markets hot into the year's election as one lever they have to pull versus awful voter polling across nearly all other focus issues. But what if Yellen not only again leans on more bills with less coupon increase than currently anticipated, but then also too clearly provides guidance to markets that this is the final coupon increase moving forward? And this is why this ties back into the quantitative tightening outsourcing decision from the Fed to the Treasury, because yet another QRA announcement of more bills / not as much coupon as currently anticipated surprise means that money market funds will again stand ready to chomp that supply, which then knocks into an even more accelerated drain out of the reverse repos. As Logan outlined this week, ever nearing reverse repo zeroing is the Fed's reaction function for their QT tapering, outright cessation of QT determination, in order to avoid systemic liquidity issues as we approach the lowest current level of reserves. Oh, sorry, what did that? Lowest, not current, it's lowest comfortable level of reserves. Okay. And if this were to be the case, instead of the consensus resumption of paying / bear steepening leading to an equities pullback, you'd likely get a reaccelerated buy the dip / receive / bull flattening. Bull flattening. Equities rally off the back as a full tilt, dovish right tail scenario for equities to blow through a new all-time high. And so, echoing the triple whammy that led us here, the triple whammy surprise right tail scenario for markets is 75 to 150 basis points of preemptive soft landing cuts in 2024. Forward guidance towards the end of coupon issuance impulse / supply driven term premium expansion, accelerated into quantitative tightening balance sheet runoff. And given the aggressive flows in the recent weeks, this surprise could supercharge the next move higher in stocks and lower in yields. McGilligot points out the resumption of enormous shorting from CTA trend universe across both STRS and G10 bonds, which too has overlapped with the macro steepener / fast money paying crowd funds. Fast money paying crowd flows. Okay, so for the 10-year, Negative 2.7%. Okay. What can stop/slow this? The key to driving downside hedge demand, which puts dealers in said short gamma, short vega position during a spot sell-off, is that we simply need to see active funds keep getting longer and taking up net exposures as they follow the Fed's lead, like the Pied Piper telling you to get long risk assets, as it will eventually necessitate hedging of that long underlying/high net. But we aren't there yet, where yes, on a 1 year look back, they're looking topped up, but longer horizon positioning/beta for long shorts and MF, I forget what MS stands for, continues to be, that might be momentum, continues to be exceedingly middling with plenty of room to take up exposure. Oh, just mutual fund. Okay. Equities positioning, they're showing that long, short, and mutual fund are under positioned. They're only like 46% percentile compared to everything else is like 98th percentiles. So they would be the ones that would be buying and pushing us further. Okay. So just as we wrote, now it all makes sense about Powell's sudden dramatic shift in rate forward guidance, the highlighted sudden saying out loud of balance sheet forward guidance shift. It seems the Fed is more than happy to quietly avoid the limelight in the election year by ignoring its mandated role of employment and inflation balance and instead reactively manage reserves, according to the Biden administration's wishes. Which, and this is my own comment, would all suggest that sometime midsummer we would start to see continued increases in inflation, right? That's what they're saying. But it's very interesting that that's all in a story about Charlie McElligott. Whenever you see his name or Nomura, go read it. Read it, because those are that's some of the best research in our market. Okay, here's a story from Bloomberg. The Federal Reserve is likely to retire the Bank Term Funding Program in March. This would entail an additional ongoing headwind for reserves and thus liquidity through 2024 at the margin. This adds weight to the case for the Fed cutting interest rates sooner in the year. The BTFP was created in the wake of the SVB crisis to help struggling banks get access to liquidity when bond prices were dropping. However, its use in recent months has jumped to over $140 billion. That is not, however, a sign of banking stress. The chart below shows the usage of the BTFP along with the rate paid in the 99th percentile in the Fed funds market relative to the upper bound of the range for the federal funds. And as can be seen, this is under zero, i.e. banks are not having to pay up to get liquidity. This is in stark contrast to March at the time of SVB's fall, when some banks were having to pay 15 basis points above the federal funds upper bound for liquidity. At the time of this rise in BTFP usage is good old-fashioned arbitrage. This time the rise in BTFP usage is good old-fashioned arbitrage. After the Fed's pivot, term rates have come down relative to the policy rate. The cost to use the BTFP is 1 year OIS plus 10 basis points, which is about 4.9%. Banks can post U.S. Treasuries at par as collateral, borrow at this rate, then deposit the funds back at the Fed at the IORB rate, i.e. 5.4% for a juicy risk-free profit. This is not good optics, so it is unlikely the program will be renewed when it is due to expire on March 11th. Michael Barr, the Fed's vice chair for supervision, hinted as much on Tuesday when he emphasized the BTFP is an emergency program. And it seems clear the emergency is over. Deposits of small banks have been rising since their drop after SVB's collapse, both on a seasonally and non-seasonally adjusted basis. That, along with the quiescent Fed funds market, suggests banks are not facing stress. Furthermore, the Fed's pivot has also increased collateral values, making banks hold to maturity portfolios less underwater. The BTFP's expiry would mean another ongoing drain on reserves as loans expire over the year. With the Fed now seemingly focused on liquidity in this new paradigm, this adds to reasons why the central bank may cut earlier in the year. The market is currently pricing 17 basis points of cuts for the March 20 meeting, so that's not an attractive risk reward, but at under 7 basis points or so, that proposition changes, more so if BTFP is no more. They're basically saying, when they only have 10 basis points of cuts, then it totally makes sense to buy treasuries again. So the downside for the treasuries on the longer term until March is definitely capped because of the whole BTFP issue, that they would need to come up with a new program to replace the BTFP. And I don't think that that's going to happen. But I'm kind of uncertain that means that treasuries, continue to buy, because they could still just kind of stay in the range that they're in potentially. All right, so I think that's about all I got for you guys. Sorry, today was, such a boring day, but a lot of you still stuck around, so we appreciate it very much. Remember, again, there is a 10-year auction at 1 o'clock Eastern time, so in about 2 hours, and that probably will be, there probably will be some weird stuff that goes on at that time, and that it is extremely likely that a Bitcoin ETF is approved after the close of the markets, and there will be all sorts of insanity off of that. So I will see you guys tomorrow for the big event, the CPI. In the meantime, stay excellent, team.